We're covering the ins and outs of real estate investing, market rates, terms, and more.
Hey, friend.
Hey, Anna. How are you? Lone
Great.
Lounge.
Lone Lounge. Here we are. That's
We
it. Yeah.
We got a update.
Yeah.
I just feel like I've listened to so many podcasts where they're like, when they do these like little like update.
Yeah.
And I'm like, we got to say that. So
Yeah,
anyway,
we did.
Little things.
Yay. We do need like little call signs or something like, check 'em.
Yeah, you know, like some
I don't
kind of
know,
weird
something,
shit that we do that
something.
makes it us.
Yeah. We
And
should
what's the cute? We
probably
actually,
not
I
write
think
it as we're doing the podcast.
I think we did a high five in one of them that's really cute in the intro.
Do we have a high five?
There's like a cute little intro thing that we did. That,
Can we just do
do it again?
Yay. Okay.
Update.
Okay. The market update.
Update.
Yeah.
Anyway, so
What do we got?
the market's
What are we
changing.
Yeah, it
Especially
is.
with the election and whatnot. We're not getting into politics. We don't got time for that.
Yeah.
But kind of where we are in the season of real estate. Let's start there.
Yeah.
It's winter.
It's winter.
It is.
It's a
we
cold
have
winter.
6, 8, 10 inches of snow outside here in Columbus, Ohio. We had a nice big chunky storm, which God, we haven't had one of those in a minute. I always buy real estate in December. Why?
It's cheap.
It's cheap.
It's cheap, and
And
nobody else
sellers-
is.
Sellers tend to be more willing to negotiate. Literally, every one of our transactions that Brooke and I have ever purchased have always been November, December.
Yeah.
It sucks to move in those months if it's your primary, but at the same time, not the end of the world, and you tend to get a little bit of a more enticing deal. Because if you're listing a property at that time, it's because you have to.
Yeah.
Either you're flipping it and like you're coming, you got to get out of that hard money loan, or this is a seller that genuinely has to move for like a job move or something like that. So they're just motivated.
Yeah.
And so again, keep that in mind. Like I talk to our investors all the time, like, well, they'll send me a deal and it doesn't really work. And I'm like, well, if you could get it for X, if you could get that for 150K, this deal makes sense. And they're like, oh, well, they probably won't accept it. I'm like, what is it going to hurt?
Yeah.
Shoot the
Ask.
number over.
Yeah.
You'd be surprised. Now you have to like set yourself up for that. No, but
Yeah.
like we're salespeople, so I guess like we don't
Yeah,
care.
we don't care. Yeah.
But like what's the harm in that? What is that going to do to you? What happens if they say yes?
Yeah. Then you've got a deal.
Then you got a deal.
Because you never know what's going on in somebody's own personal situation and what they've got in their head. Because they might have something listed for $500, but in the back of their head, they're like, "Man, I'll take $350 for this thing."
You'd be surprised how.
Because they got it. Because they got an event. They got something that's happening that they're like, "Oh man, I owe $200 on it. If I get $350, then maybe I get like about $100-ish for it, and that'll take care of my problem."
Well, and to speak on that, so my next market update on our list is the fact that, gosh, we run into investors all the time that have got themselves in pickles.
Yeah.
And so to speak on, hey, there's deals where people have to get out of them. And to be honest, they are willing to offload and fire sale something.
Yep.
You don't know what opportunities are out there. Be mindful of that. Like, again, I think it's just setting the expectation that if you send a lowball offer and they say no, every time I've had a client do a lowball offer, I'm not saying that they got it for that deal. I don't want to set that expectation. But I will say that if it didn't lock up in that transaction, they tend to disappear for a little bit. And then they come back, that seller comes back and it's like, well, but like, let's have a conversation.
Yeah.
So I don't know. I think it continues the conversation rather than just being like, oh, no, the numbers don't work. Let's move on.
Yep.
But yeah, distressed properties, distressed opportunities. Unfortunately, we've seen a little bit of a softening in the market overall throughout the whole United States. I mean, everywhere. And so a lot of the deals that people got in 6, verging on 12 months ago are, coming due on those hard money loans, and the comps that are being used today are no longer applicable. They're no longer available. And so the list price that they're having to list these properties for are much less. So you'd be surprised. I definitely think there's some opportunities in regards to, what is someone willing to offload so they can get to the next deal. Next thing is interest rates.
Oh, yeah. So, okay, here's a unique thing. We have had 100 basis points in interest rate cuts by the Fed this year.
Have we seen it, though?
No. In fact, we've seen a direct increase of 100 basis points on mortgage rates.
Yes.
How can that be? If you're trying to read the tea leaves on what mortgage rates are doing and where they're going. Don't necessarily look to what the Fed's actions are in regards to cutting interest rates, because there's not a direct
correlation.
It's not a direct correlation there. A better indicator is if you go on CNBC and you look at the 10-year Treasury note and look at what that interest rate is. The interest rate isn't indicative of interest rates, but the direction that the interest rate is going. So look at the last 3 months, and maybe we can like put up a chart of the last 3 months of the 10-year Treasury. And man, from the beginning of December, I locked a couple rates at the beginning of December, and then we closed. And then some people came back to me and they're like, "Hey, can we do that again?" I said, "Nope, that's gone. That's ancient history. Sorry." We're up about
it's about a full
percentage point, I would say, since then. So that's something to keep in mind, is that what you hear on the news, that's the other thing, is don't listen to the news as far as what interest rates are doing, because they're like 3 weeks behind everything else.
Yeah.
Talk to your mortgage professional. Call LFG, and we'll tell you what interest rates are right now.
Well, and the big thing is again, we're going to tell you what 40 to 50 different lenders are doing right now. Like, and to be honest, like a lot of our loans are backed by hedge funds, and so they don't tend to move also in the same regard. So yes, could they make a dramatic change in pricing? Sure. Conventional pricing changes a little bit every day. It just kind of moves like this. Ours, I don't know. We get a new rate sheet from each lender as often as once a week to sometimes, we'll have the same rate sheet for 3 months.
Yeah.
I will say some of our lenders you're talking about the 10-year Treasury. The 5-year kind of functions very similar. We have some of our lenders that actually part of the pricing calculation is off of the 5-year Treasury. So I told a client recently, he was like, he did the same thing yours did, that I was like, can we do another one at those like sexy interest rates? And I'm like,
nope, sorry.
And he's like, and he was like, well, how can I keep an eye on this? And I said the same thing you did. Like, if you really do want to be involved in the interest rate, play, that is something that you could keep your eye on and know kind of where we're at. Now, could that change? This is January 2025. Could that change where those are not as directly correlating? Sure. But I think it's a great way to keep an eye on pricing right now, for sure.
Well, I have a good friend and client who he's been working on a rehab, and he hits me up like once a week. He's like, "Hey man, what are rates at? What are rates doing? This is my, and I know what his scenario is, and I'm happy to do that for anybody. I want to quote Gary Busey, I want to be your friend so bad. But give me a call, and we can go through those. So even if you're 3 weeks or a month or 2 months out from finishing that rehab and you want to see where rates are going, hit me up once a week and say, "Hey, what's this scenario at right now?"
Explain why that would play a factor.
Because, well, if you're trying to determine, am I going to sell this or am I going to keep this, that could be a pretty significant
indicator. Yeah, because a full percentage point. So let's say you bought this 3 months ago, and we based those numbers off of the rates that were available at that time, and now we're 1% higher in interest rate. That deal could no longer cash flow.
Yep.
There's a good possibility of that.
Yeah.
So it's just making sure that the deal's still functioning, and your future deals are still functioning. So as you're considering new transactions, are you considering new transactions at the right interest rate? Bug us. We're here. That's what we're here for. Please, please, please bug us. Keep us in the loop on the deals that you're considering and what you're trying to do. You made a point that I wanted to touch on about rate locks.
Yeah.
So are rate locks a thing? Do all lenders do them? What does that do for a client?
That's a great question. So it's not like conventional lending. So if you go to your local bank and get a conventional loan, pretty much as soon as you get into contract, they're going to lock that and submit your application. They're going to lock that rate, and then that rate lock is going to carry you through till closing. DSCR lending is a little bit different. There is a rate lock typically, but it doesn't happen until final approval. So your rate locks are shorter. They're like 15 days, maybe 20 days, but it's just to get you from final approval to the actual closing.
Yeah.
So when we start the process, I'm going to send you an estimate. And it's exactly that. It's an estimate because my crystal ball's in the shop. It's still not working. I can't get, and my tea leaves are not working or anything. So my ability to predict the future is extremely limited right now. So
get it together, Adam.
Yeah, I know. I just need to start working on my psychic ability still. So that estimate is a ballpark of what it's going to be. Yeah. Now, I will say DSCR lenders tend to not be as volatile in their rate fluctuations as conventional lending. I mean, some of our conventional friends, I mean, they talk about rate changes that happen 3 times a day sometimes.
Which is insane.
And that would drive me nuts. But I mean, we see, it's different every month. I mean, sometimes there'll be no rate changes. Sometimes there'll be 10 rate changes.
Yeah.
It just, there's no way to predict it. It's because it's all market driven.
Well, and we have a couple lenders, not many, to be honest, that do lock at application. Whew.
Yeah.
Too much coffee.
Yeah.
And so if you are like staring at these numbers and your margins are already thin and you can't do a rate increase, like that would kill this deal. Communicate with us, and we'll communicate with you as well. Of okay, well maybe we need to look at different lenders and maybe the rate will be a little bit higher. Let's think about that. If we're going to lock your rate now, knowing that potentially changes in the future could happen, it makes sense as to why that lender has a little bit higher of an interest rate to cover their ass.
Yeah.
So it may be looking at those options. If you are not risk averse, if you're not willing to take on that risk, then it may be something to consider. And again, very few lenders lock at application. They do tend to lock for 45 days, so that covers us all day long for a refi. But it's just knowing. And so we tend to, when we send you a quote, it's like, hey, your rate's not locked.
Yep.
Or it doesn't get locked till appraisal, or it doesn't get locked till final approval, or whatever that storyline may be. But it's being very much aware of that so that when we get to closing, if the rate is high. Now, let me speak on something. The rate can go up or down. A rate lock can be advantageous in both regards. It's genuinely, your rate is not locked in at the terms and conditions yet. So if in 2025 we see rate decreases, I mean, I think the feds are predicting they're going to drop, but as we have seen over the last 12 months, that does not mean our interest rates are going to drop.
Yeah.
So I think it's just, and what I tend to tell clients that get into the rate conversation, I'm like, stop.
Yeah.
Stop. Focus on the transaction.
Yeah.
Does the transaction make sense to you? Does it cash flow in a way that makes you comfortable? Does the margins make sense? Are you going to profit what you're looking for? If the answer is yes, take down the deal. Stop worrying about where interest rates are. We are giving you a wide view lens of all the lenders that are out there and the pricing that is available. So we're already covering you in regards to making sure you're getting the best deal. These are the rates. You're not going to change this. Like, it's a control your controllable kind of concept.
Exactly.
And if the deal still works, take down the transaction. And in the future, if rates are lower, depending on your prepayment penalty, we will refinance you.
Yeah.
But like, if you're and that deal's only going to look better then. But if it looks good now, take down the deal.
Yeah,
do
it. Yeah, because I mean, your debt is temporary. It's a temporary tool that you use to acquire the property.
Yeah.
And then what's likely going to happen is you're going to see some appreciation in that property. You're going to develop some equity. You're going to buy some more properties, and then you're going to say, "Hey, man, I got like 10 properties, and they all have a little bit of equity. Let me call Adam. Let me call Liz. Let me see if I can do like a blanket loan to do a loan over everything. Take out a bunch more equity, and then
keep doing this,
and keep it going. I mean, that's a possibility. So, I mean, also you're going to sell things. Like, you're not going to keep everything. I think, especially with newer investors, they have this idea: I need to build an empire. And every property is important, and I need to, and so I can't sell anything. And it's like, sometimes you do, and that's okay.
Yeah, talk to your tax professional, know what selling implies, but
I've seen investors buy and sell and buy the same property multiple times over the course of like a decade.
That's insane.
Isn't that funny?
Welcome to our world.
Yeah.
But 2025 is your year. Know what you're getting into. Focus on the deal itself. Know that rates could go up, down, and sideways, to be honest. But we're here to support you and give you that wide view lens and make sure you're getting into the right deals. Let's make it happen.